Let's get into it. And Ethereum? Most people just think of it as the other one that follows Bitcoin's price up and down like a lost puppy. But here's what almost nobody tells you. Comparing Bitcoin and Ethereum is like comparing a gold bar to a smartphone. Sure, they're both valuable. Sure, they both live in the crypto world, but they were built for completely different reasons. And understanding why is what separates the crypto-curious from the crypto-informed. Bitcoin was built to be a digital version of the gold sitting in your safe. Simple, scarce, secure. It does one job, and it does it incredibly well. Ethereum, on the other hand, was built to be the entire internet that runs the bank, the stock market, the art auction house, and everything in between. All without a single company in charge, like a high-security vault buried under a mountain. It wasn't built to be flashy. It was built to be reliable. Satoshi Nakamoto, whoever that mysterious person or group actually was, created Bitcoin in 2009 with a very specific goal: build a form of money that no government, no bank, and no corporation could control. That's it. That's the whole mission. Bitcoin is what's called a store of value. Its primary job is to move value from person A to person B without a middleman taking a cut or a government printing more of it overnight. Think of it like digital gold. You don't use gold to buy your coffee. You use it to hold wealth over long periods of time because it's scarce, durable, and trusted. Bitcoin works the same way. It's simple, it's slow by design, and it's incredibly secure. Art that pays its creator every single time it's resold. That's what Ethereum makes possible, and that's why it's so fundamentally different from Bitcoin. Back in 2013, a 19-year-old named Vitalik Buterin looked at Bitcoin and thought, "This blockchain technology is incredible, but we're barely scratching the surface of what it could do. What if, instead of just moving money around, you could run programs on a blockchain?" And so Ethereum was born, what's called a programmable blockchain. Here's the analogy that makes this click. Think about a calculator versus a smartphone. A calculator does one thing, math, and it does it perfectly. That's Bitcoin. A smartphone can also do math, but it can run apps, stream video, connect you to social media, let you order food, hail a cab, and about a million other things. That's Ethereum. Ethereum isn't just a currency, it's a platform, a foundation that developers can build on top of. The key invention that makes this possible is something called a smart contract. The result? After the merge, Ethereum became approximately 99% more energy efficient overnight. It opens entirely new doors. This is where things get really interesting. Bitcoin uses a system called proof of work. Here's how it works. Thousands of computers around the world compete to solve insanely complex math puzzles. The first one to solve the puzzle gets to add the next block of transactions to the chain, and they earn some Bitcoin as a reward. It's a brilliant system. Think of it like a security guard that never sleeps. The guard is incredibly reliable and almost impossible to corrupt. But there's a catch. That security guard eats an enormous amount of energy food. Whether Ethereum can maintain its dominance as the competition heats up is one of the most interesting open questions in the entire crypto space. Here's a staggering stat. Roughly 90% of the most innovative and disruptive things happening in crypto right now are being built on Ethereum. NFTs, those digital ownership certificates that let you truly own a piece of digital art, music, or even in-game items. Mostly Ethereum. DeFi, or decentralized finance, the ability to lend, borrow, earn interest and trade assets without ever stepping foot in a bank, almost entirely built on Ethereum. DAOs, decentralized autonomous organizations where communities govern themselves through code and token voting. Ethereum again. Bitcoin doesn't do any of this, and it was never designed to. Now, Ethereum isn't perfect, far from it. And the biggest complaint you'll hear is about something called gas fees. Think of it like a toll road. Ethereum is the highway, and every transaction you make is like driving on it. Most of the time the toll is manageable, But when the highway gets crowded, when everyone and their mother is trying to use Ethereum at the same time, the price of that toll skyrockets. It's a dynamic, usage-driven economic model, very different from Bitcoin's rigid, mathematically predetermined schedule. Bitcoin's entire value proposition as digital gold rests on one foundational principle: scarcity. There will only ever be 21 million Bitcoin, ever. That's written into the code. No president, no central bank, no majority vote can change it. Every 4 years, the reward miners receive gets cut in half in an event called the halving. This means Bitcoin is deflationary by design. It gets harder and more expensive to produce over time, while the supply growth slows to a crawl and eventually stops completely. That scarcity is precisely why people compare it to gold. Ethereum takes a different philosophical approach. It doesn't have a hard cap on supply. New ETH is constantly being created to reward validators securing the network. Drop a comment below. Are you Team Bitcoin, Team Ethereum, or are you hedging your bets on both? I'd love to know. See you in the next one. Bitcoin is the safe, steady anchor of the crypto world. It's the gold bar, the long-term store of value, simple by design, secure by default, and increasingly being adopted by corporations and governments as a reserve asset. If the crypto world has a boring but reliable option, Bitcoin is it, and that's meant as a compliment. Ethereum is the risky, high-speed laboratory of the future. It's the platform for builders, developers, and visionaries trying to reimagine finance, art, governance, and more. It's messier, more complex, and faces real competition. But it's also where most of the genuine innovation in this space is happening. Here's the key takeaway. You don't have to pick one.